I am not going to repeat what President Juncker said in his State of the Union speech to the European Parliament in the beginning of September this year, because I'm sure you've read the speech, and if you haven't, I would, of course, warmly recommend you to do so if you find a moment this weekend. But it's one element I would like to pick up, which he made in his speech, which is the sense of a positive momentum for Europe going forward at this juncture. And you've all seen the latest figures in terms of the economy picking up across the board, unemployment going down to levels we haven't seen for almost a decade, of course remaining too high if we look at the younger generation, for example, in Southern Europe, but still I think overall we are at a good place right now. We also see a unity, an important unity of the EU 27 going forward. A leaders' agenda mapped out by European Council President Donald Tusk, with very clear kind of benchmark moments where the heads of state and government will get together and work further on the European project. An important moment next week in Gothenburg in Sweden, where there will be a social summit, but also a leaders' lunch in this kind of context of the agenda now set by Donald Tusk. And the reason I'm mentioning this is that I think it's important to use this momentum now to make progress. And it's we shouldn't be complacent. We have a window of opportunity, and we know that window will close. But the moment is now to be a little bit bold, to be a little bit ambitious when it comes to the European monetary, economic and monetary union, but also to banking union, and also to capital market union. If we look back over recent years, I think the European Union has managed to do formidable things. If we take everything from establishing recently a European border and coast guard to deal with the very complicated problem of migration in Europe, but also, of course, during the financial crisis, establishing banking union, establishing the crisis support mechanism, be it the European Financial Stability Mechanism, be it the European Stability Mechanism. But in reality, we have always been able to take these bold steps because we basically had to, because there was a crisis around us, and everyone realized that this was the moment where we needed to take a step forward. And it would be important, in our view, to now, although the sun is shining, mend the roof now and not wait until we get into difficulties next time. So that's a little bit the spirit in which I think we want to approach our policy making for the 2 last years of the mandate of the Juncker Commission. Now, and it's been mentioned already, I think we need to, when we speak about banking union and banking regulation, it was mentioned by Connor, I always tend to want to see that together with capital market union, because in reality, the two of them go together, and you know this very well. We also have ourselves made this link in our reflection paper on the deepening of the economic and monetary union, which we published in May this year, where we say that we actually speak about a financial union, which is, of course, the banking union, but also capital market union. And you know better than I do why this is so important in terms of funding opportunities for companies, not to be in competition or alternative to bank finance, but basically to widen the pie, have complementary sources of finance. And also, very importantly, in addition to the funding aspect of all this, is of course the increasing the risk absorption capacity of the economy in terms of having deep and well-integrated liquid capital markets that can take care of some of the private risk sharing that we need in the economy. And some of you will be very familiar with the discussion we have in the banking union about risk sharing and risk reduction. Very complicated. Member states have various views on how you shall advance on these matters. But in reality, if we manage to get capital market union right, then of course we have already implemented a very, very fundamental piece of risk reduction to the system. And I think all this to say that the CMU is extremely important. Now, when we started discussing CMU back in 2014, and Connor and many of you were around at that time and you remember that very well, people often tend to be a little bit confused because they would think about banking union, they would think about institutional structures, they would say, well, for banking union we have the ECB, the new supervisor. At the time we were still in the process of putting in place the single resolution board, the centralized central resolution authority for large and systemic euro area banks. And people would immediately think of, so what's the institutional dimension of CMU? And I think, as Connor mentioned quite rightly, of course the CMU is much more than that. It's work on a lot of work streams and different strands of policy at the same time. There are institutional aspects, and you will be familiar with the fact that we in September put forward a rather large package revising the agency framework, if you so wish, the European Banking Authority, the European Securities Market Authority, and the European Insurance and Pension Authority, because we believe that there is a lot of added value, a lot of let's say, benefits to be had by having better integrated and more coherent and convergent supervisory practices. That's also the reason why we have proposed to strengthen the role of ESMA in particular in certain areas. And we think this is something that we need to, if we want to be serious with CMU going forward, we have to work on a lot of things at the same time, but one aspect on this is clearly the supervisory dimension. Now, this proposal, as you know, is now being discussed by the European Parliament and the Council, and I'm sure you will all have views on the one or other article, but it's very important for us to bring this discussion forward as quickly as possible, and we are of course hoping that the co-legislators will be able to bring this onto the rule books as quickly as possible. So whereas I think the debate back in 2014 very much focused on the, let's say, institutional structure and trying to get a grasp about what the Commission actually had in mind, it would seem to me that the debate today is more focusing on two matters, one being Brexit, as mentioned by Connor, of course something that were not thought of in 2014. I think what Connor said is right, in the sense that what we need to do now is to work on the EU 27 capital markets in as solid and stable way as possible. And the other dimension is something I often hear, which is that, but Capital Market Union, the Commission is talking a lot, but very little is happening. Now, if we look at what actually has been done between 2014 and today, I think we can say that there has been quite a lot of progress. Sectorization, yes, it was a difficult journey to get there, but we have a political agreement on these proposals. Prospectus rules have been simplified. Venture capital, you can say that's a small thing, but at least we've tried to bring some simplification into the EU venture capital rules. Other proposals, very important proposals, are pending. I already mentioned the ESA review, which of course is a very fundamental one, but PEP, for example, was also already mentioned. And I would like to draw your attention to another proposal, which is sometimes regrettably overlooked in the CMU context, which is the proposal on business insolvency, which we put forward in November 2016, which actually was discussed in the ECOFIN Council today, because it's important. We should not think about insolvency as being, and I know you don't, but some people do, to think of insolvency law as only something that is for the, for the business lawyers and nothing that the financial sector needs to be particularly concerned about. I think if you want a capital market unit that works well, we need to have more clarity and certainty in insolvency procedures. If you're an investor, you would of course be more willing to invest cross-border if you would know very well how the insolvency system would work in that other member state in which you're investing. So this proposal, this is sensitive because it touches national, typically national areas in terms of procedural law and insolvency law, but we think that this is actually something which is very, very important in the context of CMU. Now, we also have things in the pipelines. We are not yet finished. You're familiar with that. You probably saw our work program that we adopted a couple of days ago. Going forward, I see a couple of rather fundamental work streams, of course, in addition to completing what is already on the table. One is sustainable finance, which I'm personally passionate about, but that is irrelevant in this context. I think that's important. We have a high-level expert group, which, as you're probably familiar with, has been working on this matter now for quite a few months. They came with an interim report at the end of the summer. We are looking forward to their final report, which will be published somewhere in the beginning of next year. And I think from our perspective, this is something which is extremely important. We see that other parts of the world is a little bit stepping away from the climate change agenda. We certainly believe that Europe needs to take a very strong role here in the forefront. And if we want to be serious about the transition to the low carbon greener economy, of course we cannot do that. Cannot happen without the financial sector, which all of you represent. Now there are of course loads of various work streams here that need to be looked at. But I think the way we see it, we would like to be rather concrete in this area, and notably look at, for example, at the issue of fiduciary duties, but also of the taxonomy, which is something when I speak about sustainable finance, there's a comment that always comes back and say, yes, we, the financial sector, we are extremely interested, but the problem is that we have no kind of standardized classification of what sustainable means in various sectors. So I think that's a very, very important work stream going forward. Another one is something you're going to discuss this afternoon, and I regret I can't stay to listen to debate, which is the whole dimension of fintech. The world around us is changing, the world in general is changing, industry in general is changing, but of course also the financial sector, this has a big impact, and that's something we need to look at also in regular terms. So not to say that we need to rewrite every single rule we have because the business models are changing, but we need to at least be conscious of the fact that maybe some of the regulatory models that we have been using in the past may not necessarily always be fit for purpose going forward. We are also working on some other pieces of legislation, as you are aware. Covered bonds, for example, something we are looking at what the need for and the benefits of a European framework. Another issue which I think is close to the heart of those of you who work in the asset management industry is a cross-border distribution of funds, notably, of course, in the context of UCITS and alternative investment funds. So all that to say that I think CMU is very much alive and kicking. I think there is a lot of things on the table. A lot of things have been done. A lot of things are on the table. A lot of things still also going forward. But very importantly here, the Commission cannot do this alone. CMU is not only about legislation. So the Commission can put forward legislative proposals. Co-legislators then in their hopefully quickly and in their wisdom dealing with this so that we get new legislation in place, which of course you need to apply, which member states need to implement in case of directives. That's very important to have that regulatory framework in place. But in reality, for CMU to really happen, we also need much more action, of course, at the national level, sometimes even regional, local level, but also from market participants as yourselves. So I think this is very much a collective action, if you wish. We saw the announcement yesterday. The Baltic countries are working on a project together with the European Bank for Reconstruction and Development to develop their capital markets. We in the Commission have our structural reform support service, which is a targeted service that gives technical assistance on demand to member states. Has been very active, for example, in Greece, but is also a service which is at the disposal of member states that so wish, that would like them to look at the issue of capital market, of better functioning capital markets. So I think I will stop there, but really with this last, so to say, plea to all of you that let's work on this together. The Commission is certainly very motivated and continue to be very motivated to do our part, but we need to have a very collective effort if we want the CMU to happen in the next weeks and months and years to come. So thank you very much for your attention.